Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.
Hello and welcome to Nirmal, ladies and gentlemen. I'm Hiral Dadia. We have with us Arjit Basu, former MD at SBI and senior consultant at AZB Partners, joining us. Welcome to the show, Mr. Basu, and always a pleasure to speak to you and get great insights from you.
Thank you very much for having me here. I think we are meeting after a few months.
Yeah. Absolutely. Mr. Basu, let's start with the state of the Indian banking system and the economy right now. Earlier, when we spoke as well, we were pretty much in a recovery mode that we had started, and we were seeing green shoots that were emerging. But now that we've been witnessing the second wave that has started to come in, do you think this is something that could come to a standstill for some time now, or do you think this recovery mode will continue from here on as well?
Yeah, so one thing is that this current surge which is happening, indeed, it is a matter of concern. But I would say matter of concern mostly for health reasons. Primarily, I think we should all stay safe. We have known people who, are contracting again. And while this is less virulent than perhaps what earlier, we should let down caution. Coming to the economy, we have to step back a little and see how we were thinking economy would be panning out, when we were discussing, say, in August, September, then December, and now, 3 months down the line, we have just finished 1 year. So 23.9%, if I recall correctly, was the decline in GDP growth, in the first 2 quarters and all. And then we have to come down, go up from that stage. So the first point is that the recovery overall will definitely be secular, right? Because you did not have from April till June, virtually entire India was shut down. Whether it is a large company or whether it's a small MSME or whatever it is, everything was shut down. June middle onwards, let's say July to September was the first quarter when activity once again started 50% levels and all that. And then from September to December quarter, we had again a spike, when we opened up for festivities and things like that. And then after that, things had really started improving. And January, February, we were really hoping that COVID would eventually go away. But this cycle that is now coming of upsurge, I don't think it was thought that it will not come. Because very frankly, we had not started vaccination, right? Vaccination, we started only in January, February for healthcare workers, and for elderly, I think we started only last month. And now it has been extended. Only about, I believe, 3 crore people have been vaccinated. That is the only permanent answer. Till then, you have to take some precautions. And when you open up completely, like you have in the metro cities like Bombay, you have opened up the train. So you can't expect thousands of people getting onto the train and maintaining distance and all that. It doesn't work. So it's not unexpected. And this will continue for some time, I would think, for the entire year. But I don't think it will completely derail the growth revival story that we have. And that is predicated very briefly or quickly, I'll summarize, predicated on 2, 3 things. The very prompt action that was taken last year by Reserve Bank in terms of giving liquidity, by the government in terms of announcing a variety of schemes, specially designed for the MSME sector and the poor who had suffered. And also, this entire concept of what the government is calling Atmanirbhar and, giving a production link incentive and all that. So that also happened. And the third and most important thing is the capex cycle itself, even pre-COVID, was on a downswing. And with investments being sought for various projects, it was reviving. So all these 3 things together, broadly, the secular trend will be all right, but there will continue to be swings up and down. Like if you see the production figure, the output figures yesterday, I really hope that they don't finally turn out to be the accurate figures, because these tend to get revised. But it was a little unexpected, that all the core sector, the output has actually gone down in February as compared to the previous month. But this kind of small swings down and up will continue to happen. But if you look at the graph overall, I think it will be a recovery, and people have predicted that will go play out throughout 21-22 and 22-23.
Right. So with this growth, another aspect that we need to constantly keep monitoring is how the inflation is panning out. And now, Mr. Basu, with the inflation, do you think that's something the government needs to keep ignoring from time to time? Or do you think that's something the RBI will have to constantly monitor in order to see how growth is panning out?
Yeah, I think they can't ignore it completely, because we have brought some financial stability and discipline by focusing on inflation. I think the only change in stance that RBI has done is to say, at one point in time, there was some thinking that inflation will be the only target which RBI will have. Very clearly, in COVID times or even for an emerging economy, that may not be the wisest course of action. But having said that, I think yesterday or today, the announcement has come from RBI that the band is not going to change. I was reading somewhere. I don't know whether it's an announcement or it is some newspaper speculation. But broadly, that is the thinking in RBI. And one other monetary policy is coming up shortly. I think some announcements could happen then. But that band which we have, they will try to keep it within that band, because as you know, inflation affects the common man and the poor much more intensively, and especially in items like food items and the ones which are commonly used. And already there is a trend which was going up, right? So keeping that in view, while growth will definitely be considered, beyond the point, I think the government will have to pursue growth through other mechanisms, just not by reducing interest. If the trade-off between classic trade-off between inflation and interest rate, that cannot be the only method.
Right. So do you think that the RBI will continue to maintain an accommodative stance from here on? Because currently, if you talk about the long-term bond yields as well, they have been hardening. And that's something that could actually lead to a rise in borrowing costs. Now, this is going to be a difficult time for the RBI to actually manage the inflationary pressures while prevent a rise in the borrowing cost. How do you expect the RBI to act in such a situation?
See, it's very difficult to actually predict what RBI will do, and they will do it based on the latest information that they have. But the message that RBI has been trying to give is twofold. One is that we know that there has been a big hit to the economy, and to that extent, the stance should be accommodative to keep liquidity available with everyone. That is one part of the thing, and RBI will continue to support that. And interest rate cuts to the extent that the situation demands. But at the same time, they also have to look at so many other factors. What is the impact on inflation, as you discussed? What is the impact on exchange rates? Because RBI has, apart from maintaining or pursuing growth, they have broadly three distinct things to take care of simultaneously: manage inflation well, maintain financial stability, and have less volatility on the exchange rate. If you look at, this is the clear mandate which the RBI has. To take care of all these factors, they will have to, sometimes give up on one and give in to the others, which is why you have so many experts in the Monetary Policy Committee who take a call. But broadly, they will try to achieve all of this. And so therefore, what at best I can speculate is that they will not perhaps do anything drastic, right? Anything drastic means suddenly raise interest rates significantly or suddenly reduce interest rates significantly. They will do it gradually. And the signals will come from the stance that they give. Yeah. So if it is an accommodative stance, it means that still they are supporting. They could then say it is a neutral stance, or it could be a stance. The stance itself will indicate what they are trying to signal to the market, so that the bond markets can also take account of that, and the rates therefore stabilize at some point in time.
Right, right. And another aspect, Mr. Basu, that the government is focusing on is on the revenue side right now. Now, yes, tax collections is something that we've already seen. GST numbers that we are seeing right now are at record high levels. Now, with this, another aspect is with regards to where privatization of the PSUs are concerned, the divestment goes. Now, do you think placing PSUs in the hands of private players is going to be something that will be able to get rid of India's banking sector woes? Or do you think that's something which should be a very slow and steady move that the government should be taking?
So here, I think you are referring to the public sector banks, which
Absolutely.
are proposed to be privatized. Two of them, the government has said that they will intend to do two, but they have not announced which two as yet. This is a twofold discussion. One is if you are discussing whether necessarily transferring it into private hands and thereby management and control changes, and therefore automatically there is an improvement in all the metrics like corporate governance or the business model or the execution. That is clearly the results are mixed. I don't need to take names. There are enough examples of banks in the private sector, not only the small ones, but large ones which were prior to that, featured as being examples of banks which have grown in the last 8 or 10 years. And then rescue had to be done, and it had to be done by the largest public sector bank only. Clearly the government would not want that to be repeated. And if you are looking at the woes of the public sector happening, woes of the public sector banking system related to ownership, I really don't know to what extent it is true. No, because there are many examples of very good public sector banks doing well. The other issue, of course, is that of capital, because as you go forward, if these banks have to grow, they have to either find sources of raising capital, either from their profits that they generate, or they have to go to the market, right? So some of these public sector banks have not been able to do that because of the current situation and the stress that they had to undergo over the last 1 or 2 years were years of recovery. But prior to that, they went through a very bad period. And at the moment, their balance sheets or their P&Ls don't look as healthy that would be necessary to take them to the market. So in that case, it perhaps makes sense that these banks are improved, because government is also simultaneously doing some capitalization. Because no investor will like to come in and get into a bank which only has problem. When they put money in, an investor does not put money in only to clean up the balance sheet. They would like to see that the money that they put in is used to generate further revenue and they get a return out of it, right? So the government has to select these two banks very carefully, prepare them for privatization, and be very clear that because what I gather is they still wish to retain some banks in the public sector, which means that they still feel that the Indian financial system or the Indian economy needs some banks who are public oriented, right? That all the schemes which are necessary for development of the economy or reaching out benefits to various sections of society or bringing them into the fold, bringing them into the economic fold, that can perhaps best be served by public sector banks, because the experience in the private sector, they are set up for a commercial reason. Primarily this thing is for investors. So having said that, to summarize what I'm saying is that the immediate thing that the government has announced, two banks, they need to choose very carefully, make sure that these banks are adequately, their balance sheets are well cleaned up, they are adequately capitalized, so they appear attractive to investors. Otherwise, who will come and pick them up, whether it is private or foreign investors. But in the long run, you have now 12 public sector banks, I think. Two of them, if they go away now, you will have 10 more. And I believe the plan is that in any strategic sector, you will not have more than 4. So over a period of 3 to 5 years, perhaps they wish to sort of privatize even the other 5 or 6 banks. That is a process in which they have to do some strategic thinking about what kind of control they wish to retain over the banking system through public sector banks and things like that. And in the meanwhile, I would think State Bank is a very good example of a bank which is given enough independence and good governance, good board members who drive. So a similar model can be followed for banks which will remain in the public sector.
Right. Another aspect that everyone was worried about was the credit growth of the banking system in the times of the pandemic. However, from a low of around 5.6% in October 20, credit growth has recovered to 6%. Do you think now that the economy is normalizing from here on, we will see further improvement? Because what's happening is that it's mainly retail loans, which is home, credit card debt. That's something which is seeing growth, whereas industrial credit is pretty much on a back burner right now.
Yes. So, first is it is a function of demand. Credit growth will happen if there is a demand for credit overall in the system. Now, there are two things that are touted, that there is a demand, but then banks are still not willing to lend. To some extent, I have not seen that, at least when I was in the bank, that, the banks have shunned sectors. Yes, they have become more careful because on the one hand, you see a huge amount of stress. And then rightly so, the banks get blamed that why is it that, you could not underwrite these cases better, so that you did not have. So now if you are underwriting cases better, obviously you will be more choosy, right? But that does not mean that the banks are averse to giving credit. Credit is always available for large corporates. Large corporates, the good corporates, obviously either they are not investing in capex. Who would not like to lend to a company which is AAA or even today AA rated? Anyone would. But you have to take more risks when the corporates are less well off, better, not so well rated. And what are the kind of risks? Is there sufficient justification for lending to those companies? Are they asking for loans only to, sort out some problems that they have incurred, or are they asking for loans for growth? Same question which investors ask when they invest in any company, right? So it's a mixed position. And as you rightly said, the growth in retail is happening because there is still demand. Individuals who are, it was felt that there'll be a huge disaster, people will start losing their salaries and all that. It did happen for some time, but it very quickly came back. So there is a lot of demand for home loans, car loans, personal loans, and things like that. And the demand is less in, say, the MSME sector or the corporate sector. But MSME has very high risk. So the other thing that I'd say is that the banks also now need to work on models. I think the government took some measures, like this. Banks themselves took, like in SBI, we pioneered that 10% additional working capital loan. And then government came up with that ECGLS scheme, 20% additional working capital. But those were short-term measures, given to existing customers. But how we can get more customers into the book, you will find that some private sector banks or good private sector banks have still grown in this period. But we did take a look into how that happened. We found that a large part of that growth came by way of existing loans being moved to that bank, rather than new customers coming on board. Not fully true, but so new customers generally has come down because of the lack of demand. So we have to take measures to revive the economy. So infrastructure spending, this 111 lakh crore project finance pipeline, which the government is talking about, the new initiatives that they have taken on giving this PLIs, production-linked incentive for various export-oriented companies. All these things have to come in play, and the entire value chain has to be captured, because most smaller MSMEs and all are linked to the fate of the larger companies. So only when that happens will demand for the companies themselves will revive. And once the companies start needing more capital, either to expand or for working capital, then they will go to the banks for additional credit. That's the main reason why credit growth is slow.
So what is your opinion? Do you think it's not going to be good if retail loans, say, including home and credit card, become the largest segment of the Indian banking industry?
It depends on the bank. So for some of the most of the banks now, what they are trying to achieve is what many of them are calling the 55-45 ratio. So retail again is variously defined by the different banks. So to me, core retail is basically the loans given to individuals. Either so home loan will fall in that category, individual home loans, individual consumer loans, the private loans that you give, vehicle loans, individual vehicle loans, education loans, these would fall. Loans given to individuals. That is core retail. I think that is somewhere around average of 45 to 50%. For most of the banks are aspiring to take it to that level. Agriculture, and because priority sector lending is required, so agriculture and MSME together have around another 15 to 20%, right? So that makes it about 65. And the balance 35 to 40 is corporate. Some banks like SBI and some of the larger banks, which do project finance, they will continue to have a slightly higher corporate finance. I think in case of SBI, it is now 40% of the total, right? So the corporate book is about 40% of the total loan book. And I would reckon that would be true for an Axis or an ICICI. And HDFC was lower, but they are also building their corporate book.
Right.
But this ratio, I think your question was that if only retail grows and corporate does not grow, ratio will change. But I don't expect it to continue for very long, because some large projects will come, and therefore, while it may not happen in this quarter or the next quarter, but overall, because the project pipeline is very strong, the project pipeline that banks have had, and which is there in, say, SBI and things like that, that was quite healthy, and which is being disclosed after the quarterly results. That is still quite healthy. So these would typically, what happens, corporate loans take some time to take effect, especially the ones which are term loans and all that. The immediate drawing doesn't happen immediately, it gets spread over a period of time and things like that.
Right. And then with this, another aspect is when we see this credit growth picking up, do you think the asset quality is something that could be worsening from here on for banks, taking into consideration the Supreme Court's recent judgment in the loan moratorium case, removing the standstill on the recognition of NPS?
Yeah, so first very good thing that the Supreme Court has done is they should not have given this moratorium. I mean, I don't want to comment on any judgment, but ideally, I feel personally that this should have been left to the Reserve Bank of India to decide. Having said that, yesterday they have given clarity around the fact that this will no longer be in place, and which is a very good thing. Now, again, I'll step back a little and just tell you as to where we were when COVID hit us. Okay, so the good news is, and that is where the good news starts, and to some extent, that good news will mitigate the difficulties which came in later. So the good news is that if you know, the Indian banking system really went through a very difficult period from 2015 to 18, roughly after the RBI action and AQR and all that. And 2016, 17, 18 was the period in which most banks declared losses, including some of the iconic banks which had never declared a loss earlier. But they took the hit upfront. And therefore, what happened was provisions essentially went up on most of the large accounts, irrespective of resolution or no resolution. Sometimes recoveries happen. SR Steel is a great example. 100% provision had to be made because the process was getting elongated. But what happened was that when the recovery came, 90 or 92% of that got recovered. But what happened was now the provision coverage ratio is very high. And what was discovered by the banks in the first 2 quarters of the financial year which just ended, that is June 2020 and September 2020, the expectation was that, because of COVID, huge number of new accounts will become NPAs and become stressed. So while some of them did have some cash flow problems, it was much, much less than expected. Because most banks, if you see their December quarter results, they have not only declared as per the IRAC norms or the Supreme Court decision, they had also declared the pro forma position. That is, had Supreme Court not been there, then what would have been my NPA position? And it was not as bad as it was anticipated. I, for one, remember that State Bank had even given some guidance as to the total number of accounts which could require provisions for the entire year. I don't remember the numbers, so I'm not saying it, but it was much, much less than what the market was expecting, which is why I think the market started viewing the SBI stock very favorably from then on, right? Because they understood that, things were not as bad. The second indicator is this Kamath committee, all the restructuring which was expected to go to the Kamath committee, that was much, much less than what finally actually went, because December 31st was the Kamath committee deadline, right? So one would have anticipated a rush to go there. And very genuinely, I can say, of course, last 4-5 months, I'm not in the bank, but till then, we found that the number of new borrowers who are coming in and who are getting stressed, who were earlier all right and getting stressed, was very limited. Because I think everyone had realized for the last 2-3 years that they needed to bring in cash flow discipline and credit discipline within the company. So that is the good base from which we are starting. But then this all gets hit by COVID, right? So COVID, your question, if it is that will COVID not have an impact? Certainly it will. But it may not be as alarming as, what some of the analysts were saying, or even RBI has given in its most conservative estimate. So I've been asked this question that, this 13 lakh, 14 lakh crore of new, fresh, likely NPAs baseline scenario. So the answer to that is RBI's job is to give the most, they are a risk manager. As far as the banking system is concerned, they need to ensure that the banking system is healthy, and they need to see the worst risk that the banking scenario can. That is the job of RBI. So they will always look at a position when things are the most stressed. And in that scenario, it is right for them to look at any figure. But the real figure, I believe, and large pointers will come because the restrictions have also been withdrawn. So I think all the results which will come from the second or third week of April, going up to the third or fourth week of May, should keep you interested. And my sense is that it will be much, much better than what the market has been thinking, right? This would be my take on this.
Right. But Mr. Basu, why this question poses up right now is because the last couple of years, if you go to see, a big share of the NPAs was accounted for mainly from the large corporates. Now, if you go to see, NPAs could be higher, say, from the MSMEs or from the retail segment as well. And these are segments which are more vulnerable to the pandemic than the larger corporates. So then, if, God forbid, anything keeps happening on or worsens on the healthcare front, and their vulnerability increases, do you think that is something which will pose a major challenge to the Indian banks in FY22?
Yeah, 2-3 things which are not very easily understood on this is that first, retail. Retail has held very good. So these are borne out by data. People said that recovery would be very low. Most of the, whether it is an NBFC or a bank, their collections have gone up beyond 90-95%, right? And very quickly, it was achieved by October, November. So retail, at the most, what could happen is there could be a delay. So someone who used to pay up exactly on due date might delay it by 10 days, 15 days, or even a month, but it will not be a delinquency in that sense. So retail is very clearly, there will be some impact, or some impact is already seen, but it is not going to be something disastrous. So retail, as we discussed, is now almost 45-50% of the books of all banks. And most of the banks have ratios around 1% at the most. In case of home loans and all, it is 0.2%, 0.3% in case of SBI, if I recall correctly. So this is not going to. Then you are left with MSME and agriculture. Now, MSME is typically around 12-15% of most of the bank's books, and agriculture. Now, MSME and agriculture, from historical times, because of the nature of their business, they have been stress sectors. Some MSMEs tend to do well, but many of them, would either become NPAs and then revive, or they would do something and then there is a loss taken. And historically, I have been seeing this for my entire career in the bank, right? So it's not that MSME NPAs had ever become 2% or 1% or anything. So they are always elevated. So on that elevation, maybe yes, some addition will happen, but it is not that now we will have 100% of the entire NPA book that will become entire MSME book that will become NPA. Same with agriculture. So what I'm basically saying is, and this has been our experience in the past also, and a lot of alleviation measures have also been taken for the MSME sector, by giving them these restructuring guidelines or liquidity lines and things like that. So given all those, what has happened is that the MSMEs therefore have got a leeway which they would be able to use, subject of course to the economy reviving and all that. And their numbers in the total balance sheet of the bank is not that high as in the case of corporate. So a large corporate falls, immediately there is an impact on your P&L and your provisioning and things like that. That does not happen. Even if some 100 NPAs were 100 MSME accounts were to become NPAs, it's the impact of that on the bank's provisioning or P&L would be much, much less.
Right. And very lastly, Mr. Basu, how big a role is fintech going to play with regards to where the Indian banking system as a whole is concerned?
Oh, it's a huge role, So, in fact, it is the role that fintechs are going to play is something which neither the fintechs also fully realize, nor even the banks, because this is, in a way happening in the present, but something which is futuristic. So, the way technology is now enabling and what you can now do with the latest things that are coming, by the time something you understand things like blockchain, or what is the benefit out of cloud, or what you can do out of maintaining a proper data warehouse and using it, or having the latest AI ML brought in for your business goals or even for your underwriting. By the time you get a sense and try to do something about it, something new comes up, and the disruption is happening very fast, and the fintechs are leading the disruption. So my take on this is that it has to be a collaborative approach, because fintechs, some of them will be very good, but they may not be able to beat the banks completely. It's difficult because banks also do a lot of things on the digital side. All the smart banks do it, whether in the private sector or even good public sector banks. So it will have to be collaborative. Second is, the potential that is there from 2-3 areas like platforms. Now, a lot of people are talking of MSMEs, you build platforms for them so that they can get linked to the banking system and get linked to the value chain. So they want to sell their supplies. Somebody sitting in some other country or in some other state in India who wants to buy at the best available price, the best available product. And they don't know which company is there to choose it. So these platforms can do that integration. Banks can also play a role.
Correct.
Some fintechs are doing. And then this potential of the so-called India stack, this concept of open banking, where the API, as we call it, the application program space that is sort of given out publicly. Some countries have already started doing it. These are things which will increasingly happen. And there will be change which will be for the better. But those who will succeed are the ones who will keep the customer in focus. Because ultimately, the thing that will get picked up is what is useful for the customer. Even if it is an MSME customer, he will go to a bank or a fintech where he finds that all his things have got eased out. He's just not looking for a loan with a certain rate of interest. He is looking for services in which he can know what is his receivable position real time, or what is to whom he can sell better, how he connect, how is his app working. So the customer, your solutions, if they are customized, the bank which is able to do that more effectively will capture the business. The best example in the individual segment for this is UPI. UPI is such a simple solution. People just moved away from, say, NEFT or online transfers through internet banking, because you can do things on the UPI, Google Pay, or some other pay in just 2 steps. Taking 5 or 6 steps in that other mode. So you have to design services and products which ultimately helps the customer.
The customers. Absolutely. I think the landscape for the Indian banking system is also changing rapidly, and I think for the better. So I think it's best for the banks to reap the benefits of the same as well. Thank you, Mr. Basu, so much for joining us on the show with the candid conversation. Always a pleasure to speak to you. I hope you enjoyed the discussion as well. Thank you, and stay safe.
Thank you. Stay safe as well. Real pleasure talking to you.
Thank you.
Wish you all the best. Thank you.